Hello and welcome to the Property News Show and our very first episode of 2020. As always, I'm joined by Mark Homer, founder of Progressive Group and a property investor. You're going to be able to find everywhere that you can follow him online in the description below. And don't forget, he's got a very, very good podcast also. Today, we're talking about a return in confidence to the market at the back end of last year. We're looking at the market growth from 2019 and looking at why Wales grew at twice the rate of the rest of the country. And finally, we'll be talking about the new Renters Reform Bill, which looks to change things to benefit both landlords and tenants. Please enjoy the show. Mark, where can people find or follow you online?
Progressiveproperty.co.uk. I'm on Facebook, I'm on Twitter and Instagram, and I have a podcast, which is Mark My Words.
Thanks. And we'll put all the links for those in the description below. So we've got our first show of the year. We talked a lot last year about bringing consistency and confidence back to the market. It's been a very, disruptive last few years with the politics in the UK and other factors and stuff. So the first thing we've got here is we've got a market roundup from Zoopla, and they're just kind of looking at what happened in 2019. And I found it quite surprising that, you hear all the bad news and all the negativity, but actually overall house prices have increased. We've had an increase in the size of the market. Do you think that's, indicative of just how the press portray the property market, or is this something different?
Well, I think the housing supply, the amount of houses that are available versus demand, how many are people out there looking for them, there continues to be an imbalance. And that has clearly been here for decades and will continue because we're not building enough houses. So I think that is underpinning these rises. They're not huge rises. Overall, Great Britain went up just over 1.5%, which some would say, well, that's just the rate of inflation. The value of money decreases every year by around that level, 1.5%, 2% probably last year. So it's just equal to that. Clearly, as a homeowner or as an investor, if you've got a mortgage on the property, the mortgaged amount, the inflation actually has an inverse relationship on the mortgage because it degrades the size of the mortgage. So whilst, yes, the value of the property is only sort of staying constant because the value of money is reducing, if you've got a mortgage on it, actually you're winning. Because the mortgage balance has gone down in real terms by 1.5% over the same period. So I think overall it's good for people owning homes. Clearly not so good for people trying to get on the ladder. The press are always going to jump on negative stuff. There was a lot of negativity around Brexit and uncertainty and lots of sort of toing and froing and consternation in Parliament, which caused a lot of negative press. So I suspect without that, you would have seen in excess of 5%, could have been up to 10%. If we hadn't had all these issues.
Do you think that might happen then this year or next year?
Well, it's coming. It's definitely coming. I think certainly in the first half of this year, it takes a while for confidence to feed through. So you're not going to see anything for a little while. And all the Brexit stuff's going to start again, the no deal possibility, although I don't necessarily buy into it as much now because I've seen how they've extended a couple of times. I'm not sure it's really in anyone's interest, but the press will latch onto it. Of course, it's going to be a good way to sort of sell papers and spread a bit of fear.
Bad news is good news for the press.
So you're going to have more of that this year because Johnson has enshrined this sort of inability to extend when negotiating the future trading relationship with the EU over this next year. But I think the fact that he's got such a big majority, the fact that there's going to be a lot less sort of arguing and, rudderless sort of lack of direction in Parliament, I think that's going to be a very positive thing. So, I think certainly in the medium term, things are looking a lot better. If you look at what I find quite interesting, a year ago, we were in a situation where the yield curve, which is the yield or the the income that you'll receive on bonds, specifically US Treasuries, which are US government bonds or US government loans. If you looked at the 10-year Treasuries, generally speaking, you should be getting a higher income on a 10-year US government loan note than you would do on a shorter period, maybe a 3-month or a 6-month. And therefore you would have a sort of an incline or an increasing yield curve. The further out, the money that you're taking. What's interesting is when that yield curve flattens or inverts, i.e. the income that you're receiving on 10-year money is less than 3-year money, generally speaking, the market and lots of economists and market commentators would say that has historically indicated a recession that is due, or an imminent recession, I should say. That yield curve a year ago inverted, and has done a few times during 2019. It's actually gone the other way now, and this whole notion of recession is starting to recede.
Yeah.
The talk of it is starting to recede. So that's quite an interesting point. And that's a global thing. So you've seen stock markets go back up. They're almost back to all-time highs. Obviously, gold has an inverse relationship with negativity and uncertainty. So that's gone down. And this all comes off the back of the sort of trade, improving sort of trade, perception of trade relationship between the US and China.
Do you actually, on a kind of slight side note, not directly related to the UK property, but do you think, we have managed to avoid a global recession, or do you think it was a lot of bluster that kind of led to that downturn, or do you think we've legitimately managed to avoid one or put it off for a few years?
I think the jury's still out. Clearly, this was all triggered by Chinese growth, Chinese debt, and overall Trump getting sort of banging the drum about China taking advantage of US markets. Therefore, he imposed more and more tariffs and barriers on Chinese goods going into the US. The Chinese retaliated, and the worry was global growth will suffer. People think that a trade deal is nigh with China and the US, so they're less worried about global growth. So you could have a couple more rounds of this, especially if Trump stays in position. But I think the boat's probably sailed, even the next president maybe going down this road, because there seems to be support for it. I think the perception of recession has receded, or the perception of the likelihood of recession has receded.
So we should see some period of growth for a little while and confidence.
There's been growth all the way through. Here, the US, all the way around the world. It's just that people have been predicting 2 quarters of the economy reducing in size around the world. So I think things are looking up, and I'm feeling really positive.
Good.
Yeah.
So as part of this, the UK average increase was 1.6.
Yeah.
But Wales saw 3.9, and the Northwest saw 3.2.
Yeah.
Which is like both of those more than double the average.
Yeah.
You got any reasons why I think they might be, have performed so much better than
I just
a lot
think
of
they're
the UK?
playing catch up. Always happens as you come out of the previous recession or into this new cycle, let's say 2009, 10, Mayfair, the epicenter, London, it starts there and then it spreads out, and you saw massive growth in those areas. But in Wales and the North, there was nothing until later in the cycle. So I think they're catching up with the rest of the country.
And that's the ripples travelling out.
Just the ripple going out.
And you might end up seeing, places like Mayfair be on the start of the next cycle when these places are still experiencing the end of the previous cycle.
Already happening.
Yeah.
Already happening. So you saw, Mayfair, Kensington, Chelsea, Knightsbridge, all those areas probably drop 25, 30% average, over the last, say, 3 years. I think those falls largely, it's been reported that they've stopped.
Yeah.
And actually, I suspect there's been a little bit of an uptick on actual tradable values in those areas. and I think they'll start growing again. It doesn't mean those areas in the north are going to fall.
No.
But they're just behind.
Yeah. Okay. So our second story today is about a return in confidence to the property market. So some big figures here. So there was a big autumn bounce with approvals for house purchasing rising by 7% in November, and a big increase in the number of loans that were being approved for remortgaging specifically as well. We talked a little bit about this, but why do you think we've had such a big bounce at the very end of this year?
I just think 31st of October was supposedly no deal day. People were quite concerned about that. They were holding off. There were probably a lot of sales that were in the pipeline, and people sort of said, I'm not going to do anything, or I like that house, but I'm not going to bid on it, or I'm not going to apply for a mortgage until I know what's happening with, is there going to be a no deal? Are we coming out of the EU? Is there going to be major disruption? And are we going into a recession? And of course, on the 1st of November, it became clear that the EU had extended again, that sort of disorderly Brexit wasn't going to happen. So I just think that's it's transaction volumes have been depressed, severely depressed in say September, October because of that, and you've got a big bounce in November when the future becomes clear.
What do you think to the increase in number of people remortgaging? There's a 12.7% rise then. Obviously there's previously been trends where if people are choosing to remortgage rather than move, and they're going for home improvement rather than buying a new house, that's not as stimulating to the market as people moving on. Do you think there's anything to read into that? Yeah,
I think it's driven by uncertainty. I think it's driven by people more concerned as they were about no deal, recession, losing their job, house prices falling potentially. I think all those things come together and create a situation where people will tend to extend their properties, refurbish them, remortgage to release some cash to improve rather than to move. And we've seen a lot of that. I think in addition to that, the more expensive properties, certainly over about 930, 940, the stamp duty's gone up a lot. So I think people are looking less to downsize. I think they're looking, or should I say, people are looking less to upsize. And, if they're, I don't know, people, maybe they're older, they're living in a bigger property, maybe there are less people bidding on those properties because of such an increase in stamp duty. People don't want to pay it. Stamp duty's gone up on second homes and also on buy-to-let as well. So I think that's driven less transaction volumes or lower transaction volumes, therefore more people remortgage and refurbish. And
do you expect that'll be something that will change as confidence returns and, we have this more, at least a higher perception of confidence and growth?
I think it's likely to improve, isn't it? Already now, since the election, since the majority, I think, there have been quite a few sales go through in December, and you'll see a lot more in January. Certainly in the more expensive areas, the international areas, say in London, a lot of international buyers are feeling a lot more confident. I think it's likely to turn around. I think the stuff right at the top of the market, that is millions, several million, the stamp duty is prohibitive. It can get into double digits, and I just don't think people are interested in spending that sort of money on stamp duty. So I suspect that end of the market will remain being gummed up.
Pretty stagnant there still. Yeah.
Why do people want to, if you're, I don't know, let's say you're in a £2 million house and you move into, I don't know, a £10 million house in London, and you've got to pay, I don't know what it would be exactly, but an average of 10, 12% stamp duty, something like that. That's £1 million in stamp duty. Lots of people would say, well, maybe I'll buy a project at $1 million, or maybe I'll extend this house and I'll spend 200 on an extension.
Or if you've got that cash, you can build yourself, can't you?
I just don't think people want to throw that money away in tax.
So they're finding other ways to get their own growth and what they want to do rather than buy. Okay. And our last story, we've got the what is now being referred to as the Renters Reform Bill. So This was talked about in the Conservative Manifesto.
Yeah.
We've since had a majority. We've since had the Queen's speech, where this was again mentioned. And we've got the key 3 pledges, which are to give tenants more security and end no-fault evictions, give landlords more rights to take back possession, and the introduction of a new lifetime deposit scheme. So all of these don't have a huge amount of detail to them yet.
Yeah.
But what do you think this, assuming this comes in the next, few months to a year, and is fleshed out as we imagine it would be, what do you think this means for the market and for investors?
Well, from my point of view, as I'm now a homeowner, or I have been a homeowner for a number of years, the reason why I wouldn't rent is probably because of the provisions of the Section 21. I've got my family in a home. We've spent, a good sum getting it exactly how we want. We've refurbished it, sort of all the colours, and Gemma's got what she wants in there. With a Section 21, you could get a sort of notice to quit or eviction notice, which could be 2 months. So that doesn't give you a lot of stability. And I think for people like me, that would stop them renting. So clearly that is a hindrance and has been an issue for the market. Looking at it from the landlord's point of view, the Section 8, which is the part of the Act that allows you to evict for arrears, non-payment of rent, or breaching the tenancy agreement in some other way, has too many holes in it. It allows tenants to bring up reasons why they're not paying the rent, or reasons why they're not looking after the property or whatever. And it can create a lot of delays. In the end, you get the property back, but you can be waiting 6 months, huge legal fees, loss of rent, and all the sort of issues that come along with that. So typically, landlords will just revert to using the Section 21, which there is no defence if you've given sufficient notice and followed the procedure within the 21. That's what landlords will generally use. So lots of landlords are quite upset about this, but the government are saying that they're going to bolster the provisions of the Section 8 so that you can evict for non-payment of rent, or breaching the tenancy agreement in some other way, I don't know, upsetting the neighbours or whatever, or damaging the property. So clearly, if they do that, I don't think most landlords will have an issue as long as they do it in the right way, and landlords can evict for those.
They'll make
those
Section
reasons.
8 what it always should have been, which is a robust way to evict tenants for legitimate problems. Which means you will no longer need Section 21.
No.
Which has been a fallback for landlords because Section 8 has been so toothless in the past.
Yeah, exactly. So let's hope they use this opportunity to do that, because of course the jury's out. It's not clear
obviously,
whether they
the
will
worst
or they
case
won't.
for landlords would be you abolish 21, but then 8 doesn't get the teeth it needs. So then you're stuck in the position you were before, where you can have tenants that you can't get rid of, and it's costing you a lot of money, fees, and lost rent and stuff.
Exactly. So I think what's likely to happen here is benefit tenants and tenants with questionable credit records are going to find it even more difficult to rent a property, because initially landlords are going to be concerned that it's going to be more difficult to evict if they don't pay the rent or they cause other issues in the property. But clearly, if the Section 8, if they do reform it in the right way, then I suspect things will calm down and it won't be such an issue. It's all down to how they deal with this Section 8 issue. There's also going to be a couple of provisions in there for if you're looking to sell the property or you're looking to move back into it, that's also going to be a valid reason to evict the tenant, which clearly is a major concern of many homeowners and of course mortgage lenders as well. You have to remember, if they don't deal with this in the right way, buy-to-let mortgage lenders are not going to be interested in offering loans on these properties. So it is in the government's interest to deal with this in the right way. There are lots of sort of non-paying tenants, and the provisions to evict are not strong enough. The whole market will just gum up, and people will not be interested in renting. So they have to deal with it.
It's a very fine balance to get it right for both the for the lenders, for the the investors and the landlords, and for the tenants as well.
Because about Jeremy Corbyn again, but this whole notion that landlords want to revenge evict tenants, most landlords, because most landlords are good landlords. It's not true. If you've got a good tenant and they're paying and they're not ruining the property, stripping it, upsetting the neighbours, growing cannabis, doing 90% of the landlords that I know, they're just going to want to leave them in the property and carry on taking the rent. It's a long-term investment. So it wouldn't be an issue for them. The only time that the vast majority of landlords are bothered or want to use a Section 21 is when the tenant's not paying the rent. Yeah. And that's at least 70% of, the time that they want to use it. And then the rest of the time would just be damaging the property. Yeah. This is, they say it's hard to do. Dodgy landlords and all the rest of it. I'm sure I buy that.
And the last thing they have is this concept of a new lifetime deposit scheme. So you'll be able to transfer, renters will be able to transfer the deposit from one property to another without having to build another deposit. Obviously, I've known people that rent, and that can be a barrier to stop them moving to another property. Maybe they want to move upwards and go from, say, a smaller property to a larger property, but what's holding them back is being able to raise, the deposit for the month's rent. Do you think this is going to be a good thing? Think there should be a bit more mobility in the market, where people are no longer stuck because they don't always have to come up with those big sums every time they need to move?
Well, I think what we're talking about here, because we discussed it before we started the show, is cash flow, isn't it? So maybe tenants don't have the savings to finance the deposit which they haven't received back on their old property, and spend 2 month money on 2 months deposit on a new property. So effectively, they may be out with 4 months rent when maybe they should only be out with 2 in the cases of this. If they deal with it in the right way and the deposit is released in a fair way, i.e., if the tenant has damaged the property and deductions are correct, and because obviously there are a few schemes that the deposit can go into, or insurance schemes and all that. Of course, I think ours go to DPS within our lettings business. As long as it's released in the right way, then it's a good thing because it allows increased mobility. Some landlords won't like it, but they're probably the ones who are not competing effectively, haven't got great properties, whatever. I think if you've got a good property and you're sort of looking after the maintenance, and you probably wouldn't see it as a bad thing.
No, I think the topic of deposits, I think, has come a long way as well. I remember when I went to university and everyone put their deposits down, it was
never got
an assumption you would not get your deposit back because landlords will find any excuse to say, "Oh, you did this, you can't get your deposit back." Yeah. And at that time was when they first introduced the schemes where the deposit was held by a third party, and then you show the evidence for it. So I think it's a positive change if implemented correctly. It protects everyone, and is another thing for there to be less complaining about with landlords if it goes well.
I think that it has the potential to do that. May not affect landlords very much. Clearly will benefit tenants. Landlords aren't getting these deposits anyway. In the main. All right, there are insurance backed. I think TDS. You can sort of take insurance out and keep the deposit, but generally landlords aren't getting the deposit anyway. No. It's going off to the DPS or wherever. So why not help tenants with their cash flow?
Yeah, absolutely. Okay. So before we finish, you got anything you want to say to our audience at the start of 2020?
Well, I'm quite excited about 2020. Clearly, the political landscape is a lot more positive. I think, all these concerns around the right to buy for tenants have been taken away off the table. Rent control with Labour and Corbyn, that's gone. Yes, we've got these changes. The Conservatives aren't necessarily the landlord's friend anyway, but I think we've got a hell of a lot more certainty. I'm a lot more positive, and I'll be doing a lot more residential. It got to the end of last year and I was I don't know. I was thinking I'd probably be doing more and more commercial, and maybe almost doing no residential for a while. But I'm not feeling like that again now. So feeling really, really confident and positive. And I think we've got a nice period now to sort of get in. You know, the market hasn't suddenly bounced, and it won't do for a little while. But I think all of the seeds and the sort of fertile ground is there now to create a nice little uplift.
You can almost see the bounce coming.
It's going to come.
So you can act now and take advantage of that. Get some
so.
stuff a bit cheaper than it would have been. Get ahead of the game.
Yeah.
Okay, great. Thank you very much. As always, thank you for watching the Property News Show and joining us for our first episode of 2020. Please, if you have anything to say on what we talked about today, leave your comments below. We love hearing it and we reply to as many as we can. Please like, subscribe, and we'll see you next week.